What's up, everybody? Welcome back to Earn It, Save It, Invest It. This is week 24 of my $100,000 challenge, where I'm taking $7,300 and I'm turning it into $100,000. So it's week 24. I'm going to go over the balance, what I've done, what I think is going to happen in the market. We're starting to maybe see some cracks or something of a correction possibly happening here. So I'm going to go over what stocks maybe you should kind of be looking into, what stocks you should be, kind of backing away from. So we're kind of just going to go over the market, go over what I've been doing in this portfolio. So let's just break it down real quick. Actually, first, if you can, go ahead and give a like and subscribe. Really appreciate it. But first off, let's go and look at my $100,000 or my road to $100,000, right? I am now at $8,492.40. Went down about 0.76 on Friday. If you know, I have been doing horrible in the last 2 weeks. Not horrible. 2 weeks ago was bad, right? Or last week was bad. And then this week was just not good. Last week was really bad, and so I've gone down, I'm going to go over the stocks. Now the top weighted position, I'm going to do it this way really quick. Sorry, here we go. So my top weighted position is TQQQ. So you can see that this is now taking up a total of 18% of my portfolio, whereas in HIMS is only 17.5. Now, granted, if I had those 10 shares that I had sold earlier, it would still be above TQQQ, but HIMS is now going down. HIMS is starting to crash. I mean, I would call it a little bit of a crash, right? I mean, anything that's 20+%, 25%, I would call it a crash, and it has gone more than that. So HIMS has gone down significantly, which has really hurt my portfolio, as well as Celsius. Celsius took a really big hit, about 20%, 25% hit in the last week or 2 weeks. So those two positions, which you can see is now at 11%, and this was 17.5. It was more, right? It was definitely more, and then they had a little bit of correction. If we look at this one right here, Celsius, just in the last month is down 30%. Just in the last month, Celsius is down 30%, right? HIMS in the last 1 month is down 30%. They're both down 30%, but year to date, it is up 52%, right? Celsius year to date is up 62%. I didn't buy these January 1st. I did buy these a little bit later, but still, just because something goes through a major crash doesn't mean that it's everything, it's all coming to an end. Over time, these things are going to continue to go up and up and up as long as they're good companies. So I still believe in HIMS and Celsius, but they have been taking really big hits in the last 2 weeks. So my portfolio has taken really big hits. This is my $100,000 challenge, and this is, I'm keeping track of every single week, right? So this is week 1, week 2, week 3, week 4, right? We go all the way down, we're week 24, right? My goal right now is 20% compounded annual growth rate every year, right? 20%. I don't know if you can hear the siren, but something's going on. So going by that math, plus my $50, right? I have $50 a week. I should be at $9,249. Well, I'm at $8,492. Almost the same numbers, just different. And I took a big hit, like I said, 2 weeks ago, 8% down, right? This is my weekly change. So this is my current balance. This is my weekly change, what I've done every week. This is my balance versus the goal, right? What am I going against that goal, and what's my balance? And so I'm at negative 8% now against what I want to be, doing, right? I want to be at, I want to be at 9,240 or more, but instead I'm actually negative 8%. But since June 2nd, I'm still up 15%. I'm still up 15%, even with my top positions taking, right? Mad, like 30% in the last month. So I'm still up 15%. Not great, right? But not crazy either. Because we're talking June 2nd. June 2nd, the market's gone up. The market's gone up probably more than that. Definitely more than that. But still, I'm almost to the market. I'm almost performing to the market with my biggest positions taking biggest dumps. So that's all right. Here's the problem though. Here's the problem, and this is why. This is why it matters so much to be making deposits. Because if I take out my $50 deposits, right? This is 15% since June 2nd. But that is including my $50 deposits. I started this goal with $7,354, and there's been 24 weeks times 50. That's $1,200. I should be at $8,500 with my $50 deposits, right? So I'm technically, if I were to take out my cash and I had just done my investments, I'm at negative 0.84% now. It's the first time I've been negative. This whole time I went almost there. The second week I had a little bit, and then I just continued to perform well no matter what with the 50, and then just started crashing bad, right? But the point is, when you look at the difference, now granted, when I'm into the 25,000, into the 50,000, right? My $50 deposits do not make as big of an impact, but they make big impacts right now, really big impacts right now, to the point of 15% over 5 months, right? So those deposits have helped save me. I've been able to buy into some of those stocks, right? Get good positions on some stocks, right? Also have some cash. So that is what's very interesting, and that's why it's good just to constantly or consistently make deposits, even if it's little. It's just $50 a week that I'm doing. You could do $10 a week, right? But just do something so that, and you could be starting at 1,000, right? If you start at 1,000, but you did only $10, you'd actually be doing more percentage-wise deposit towards your account than, you'd be putting in 1% right away, right? Putting in 1%, where I was not. I was putting less than 1%. So, it's very important to be making those deposits. So again, every Monday I make the deposit, $50, and then I did buy Meta. I bought some Meta today. I bought $50 worth of Meta at 608.87 basically. Meta is a great company. It's out of all the Mag 7, it's at the lowest PE, forward PE. They have great growth rates. I believe in the company. I do also believe in what I really like about Meta, and I guess you could say this about the Mag 7, to be honest with you, most of them, right? It's not just, except for Tesla is not at all like, they don't have the same kind of thing where all of the companies are good now. But then I think about 10 to 20 years from now, it's still going to be good, right? Meta is still going to have all these different, not softwares, but like the apps and just different things where they're going to be able to, reach the billions of people that they reach. Plus, I think VR will be the way of the future. I still think it's, like I said, 10 to 20 years. I think my kids' kids are going to grow up with VR. I think my kids are going to be in their 20s. Right now I have a 10 and a 7-year-old. I think they're going to be in their 20s when it really starts reaching mainstream. I think at some point we're going to be watching a lot of concerts. People, just think about any of your favorite music artists, right? They want to perform. They can perform in their garage. They can literally perform in their garage. They could just have a cool setup, pay some cool, get some really nice cameras, right? Some 360 cameras, and then charge $5, right? $5 for that, and then $5 to have a conversation at the end of it, where they have the chat and you can do all that, and it's 360, but they perform and they do it like. All of that stuff's going to happen, I feel. Obviously, so many people do things for free on YouTube and everything, but there's always a price, right? You can have advertisements, you can do that. But I watched a Lakers game. I put on the Oculus, and I was like, courtside, and I was doing this because I thought, the coach kind of walked in my way. And it was interesting to have the coach walk in my way. And I was like, yeah, I like that. Even though for a second I didn't see, what was happening, I enjoyed feeling like I was really there. So I think that's going to happen. It's just not happening yet. It's going to take a while. Our brains, our eyes are not ready for it. Anybody who is my age, I think even in their 20s right now, who are going to be into their 30s, our eyes and brains are not going to be able to process that screen, the light. I just don't think so. My kids were born with screens, basically, right? All of our kids had screens. So that's just my take on Meta. That was kind of a long speech, but I do believe really in Meta and that future. So, and you just have to always look at, companies 10 to 20 years from now. You don't have to, not 20 years, but, at least 5 to 10 years. And then if I try to look 20 years, if I can see what I think the future is going to be like in 20 years, I'm not a philosopher. I'm not, I can't predict the future, but what I can, based on how the last 20 years has gone, where it seems like everything is going, I think Meta is going to be a part of this world in 20 years. So anyway, that's that. The AAII Sentiment Investor, it's where they do the survey. We're still continuing to go down. We went from 38% bull to 31.6%. So we lost almost 7% of the bulls. Not only did we lose 7% of the bulls, but we gained a lot of bears. We went 13% up, right? So that's a 6% we took away here. 6% neutral, they just said, what, we're going to go. Nah, we don't feel good about it. So right now we're really hitting high numbers. Now let's see exactly, I'm going to do this live right now. I did not check this out, right? So we hit 49 right there. Let's see when the last time we hit around 49. September 10, August 20, that was close. So, and since June 18th, we've been 40s, 30s, there's been a lot of bearishness in the market, right? A lot of bearishness, kind of bouncing up and down because we've been about the tariffs and stuff. It hasn't been great. When we look at historical averages, it's 31%. 31%. Weren't we over 31% basically this whole time? Yeah, this whole time, all throughout, right here, bearish. Ever since June 18th, we've been above the average. Right now, let's look at historical average for the bulls, 37.5. We've been kind of bouncing around there, right? A little under, a little over, a little under, a little over. Kind of under right there, a little over. So the bulls have been kind of there. The neutral and I bet you neutral is 31, right? And it's been less. Yeah, because all these people have gone over to the bearish side. So the market's been bearish. You could say it's been historically feeling emotionally more bearish, even though the market's still been going up. It's very interesting. Week's special question: do you think the government shutdown has an effect on the economy? Of course it does. Or what kind of an effect? Slowing the economy? Yeah, duh. You shut down so many things about the economy or about the government, and it shuts down the economy. You get what I mean. We're in extreme fear still. I called this out. I said extreme fear was going to happen. It's the same thing I said about HIMS. I also said HIMS was going to crash. I did not say Celsius was going to crash. I did say HIMS was going to crash. And I did say my account balance would probably hit 8,500 again. Now, this was I was not assuming these big of a crash right now, so fast within a week period, but I knew it's going to happen at some point, that I would dip and then it's going to come back up. And as long as I can continue to buy and get good companies, and I'm okay with this. So we're in the extreme fear, 22, that's my number. But right now we're in extreme fear, and that's not, I don't like that, because of course, who wants to be in extreme fear when the market, what's weird is that we're in extreme fear and the market is basically at all-time highs. You know, it's not at all-time highs, but it's basically at all-time highs, right? This is the heat map. As you can see, you know, overall it's been kind of a mixed bag. The finance took a hit, but it's kind of overall a mixed bag of everything. Amazon's down a little bit. We got Meta barely down, Microsoft up, Nvidia up. You know, it's kind of just all over the place. HIMS, since I started this challenge, has gone down 35%. HIMS has gone down 35% since I started the challenge. And if you think about that, you'd think that my portfolio should be like obliterated, right? Like, it was one of my biggest positions when I started. It was, you know, it was just such a big position in my portfolio. I mean, it was like over in the 20-25% range. And it's gone down 35%. Now, granted, I did sell 20% of my holdings at 58. Literally right here, right before it went boop, boop, boop. Right? I just was like, you know what? It's not going to have a good October and November. I just don't believe in it, so I'm selling it. I put my money where my mouth is, or I took my money out, whatever you want to say, but I did it anyway. Though the point is, down 35% on this position since I started this challenge. Yet I'm not devastated on this portfolio. Now Celsius, since I started this challenge, has gone up 12%. Even though it has gone down, you know, in the last 25 days, 35% basically, it's gone up 12% since I started this challenge. And as you can see, it probably has a long ways to go, right? I mean, like, look at this. You know, it's just a big dip, and it's probably going to come back up. It'll move its way back up. You know, it's going to take a little dip. Okay, fine. But Celsius will move its way back up. I just took a big dip on it. It's fine. And this is why you want to be diversified, right? I don't just have Celsius and HIMS. I also have Nike. I have TQQQ. Now, that's a dangerous one too, right? That's a dangerous one to be in. But I have other stocks. I have Amazon. I have Meta. I have Fubo. I have a few other stocks. I'm going to start adding on a few other stocks as well. But, you know, I started this challenge with a total of, I think, 7 stocks. And, you know, you just want to be diversified. So I'm going to diversify a little bit more as, you know, this starts to build. But yeah, I think it's just you want to make deposits, right? I just think that's the biggest lesson and point I want to make out of this whole thing is that you want to make deposits, consistent deposits, because if I hadn't been doing my deposits, I'd be down. I'd be negative. I would not have I wouldn't have 8,400. I'd be down to $7,300. I would literally have $7,300. I'd have a little bit less than that, actually. So the fact that I'm above my goal, or I'm above my starting point, purely because of my deposits, and you can look at that as like, well, your investments haven't done anything, right? True in a way, but they just took huge hits, which I don't believe it's going to sustain. Meta took a big hit. Meta took like a 15% hit. You know, Amazon's the only one that really went up. It took a big boost. Fubo went up really quick, and then Fubo dropped. So, and these are companies that are going to go up. So I'm not worried, but it's the fact that having those deposits in there are going to keep me being able to buy stocks, and it's going to keep that portfolio balance moving and pushing forward. So yeah, that's the only thing I really wanted to say. At the end of the day, you just got to make deposits, and just being consistent with it, because if you stop making deposits, it will change everything. So yeah, anyways, please give a like and subscribe, and never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.